Hello, everyone, and welcome back to CapEx Investors Real Estate Investing Educational Series. Today, we're going to be talking about, is it better to invest in real estate or the stock market? Well, there's a lot of opinions about these two asset classes, so let's figure this out. First, we need to talk about a couple of housekeeping items. Our attorney's advice is that we need to let you know that investing in any asset class can cause you to lose your entire capital. So please make sure that you consult with your attorney, your CPA, and your financial advisor before you invest any money at all. Additionally, we need to let you know that the information contained in this video is for educational purposes only, and that it is possible to end up with less money than what you started. There are different types of investment classes out there, but for now, we're going to talk about stocks and real estate. And so what we wanted to do is look at the performance of these two asset classes over the last 5 years. Focus primarily on the S&P 500 index and what the average annual return was for a 5-year period. It turns out that the average return for the S&P was approximately 7.51%, while the multifamily sector had an average return of about 39%. So, which of these two asset classes seems to be better for you? Which makes the most sense? Well, to find out, let's run a little experiment. So what we did is we took $100,000 and we divided that into two. So we applied $50,000 to an investment portfolio or stocks, and then we took $50,000 to purchase a rental property. So let's look at the investment portfolio. If we took $50,000 and we invested that over a 30-year period with the S&P 500, and it had a consistent return of 7.51% annually, our account value at the end of that 30 years would reach approximately $472,500. Now, on the rental property side, if we took $50,000 and purchased a property for $250,000, and that property appreciated in value at 5% annually, over a 30-year period, the property value would reach to approximately $1,117,000, which is a very big difference between the two. Now, I know that we would have expenses with that property, such as a mortgage payment, let's just say about $1,000 a month, property taxes, homeowners insurance, that would probably come out to about, let's just say $305 a month. So your total expenses, let's just say, are around $1,303 monthly. If we were to rent that property out for $1,500 a month, we would receive a net cash flow of about $197 monthly. That translates into $2,364 annually and a return, a cash on cash return of 4.73% on year one. We also have to take into account that the property would appreciate in value by about 5%, and that would translate to $12,500 on the first year. When we add both the 12,500 plus the 2364, that gives us a return of approximately 30% annually. So let's recap. We purchase a property, we pay it off in 30 years, and the value reaches to approximately $1,117,000. In addition to that, the property is rented out, and the rent continues to increase year over year at an average rate of about 3%, which means that at the end of 30 years, your monthly rental income should be approximately $3,685. So the question is, can we do this again? Well, the answer is yes, because let's talk about the magic of refinancing. So on property one, if you decide to refinance that on year 5, and that property reached a value of, let's just say, around $321,000, you could decide to pull out some cash, let's just say about $65,000. So you can turn around and buy another property. And at that time, let's just say the property values are around $320,000. You would set that mortgage payment to pay off in about 25 years so you can retire on your timeline. You're not extending your retirement timeline. Now, property one at the end of 30 years would be worth about $1,117,000, and property two would have a value of approximately $1,114,000. That makes a combined value of $2,231,000. Plus, you have the gross rental income that has increased over that 30-year period to approximately $7,370. So looking back, whether it's better to invest in stocks or whether it's better to invest in real estate, from my personal opinion, I would say that investing in real estate yields the better result over time. Now, if you'd like to learn more about how you can build wealth and invest passively in real estate for long-term gain, you can contact us by calling at 310-496-4900, or you can reach me directly at diego@cbancorp.com. You can also check us out on the web at www.capexinvestor.com. So I look forward to seeing you on the road to financial freedom.